Afternoon, Zach.
How are you?
Yeah, very well, thank you.
Okay, let's. So we sort of seem to be more back to normal this week. Is that a fair thing to say?
Well, I think so. Although truth told,
We don't know what normal is anymore.
nothing's really changed, has it? You know, Greece has been swept under the carpet for another week or so, and people are, casting around for the next thing to focus on, and probably hoping to start thinking about their summer holidays as well. So, but I fear there'll be some fireworks in the coming weeks to keep us on our toes.
Okay, well let's go into the slides you brought in for us today, and we're starting off with the data released over the European session.
Okay, well the first point is one that came out prior to the European Open, but I think it's just worth reiterating. So it's the release of the Bank of Japan Monetary Policy Committee minutes from the previous meeting, and the takeaway or the headline that stood out to me was that members of the committee are finally admitting that there are diminishing returns from QE. And we've been saying that for some time. So I wonder why, if we can spoil it all the way from over here, it's taken them this long to realise it on the ground in Japan. But I just leave that that comment to stand alone. Basically, they're saying that short-term interest rates, despite all their efforts, are edging higher, and that they're not seeing the economic benefits of stimulation of the economy, which basically isn't happening. So they've got something really to think about there. And then
not raising taxes every time they do that stimulation might actually help.
Well,
they did a bit of that before.
Yeah, absolutely. If
sales tax up, and then
Yeah, if you want to get the domestic economy going, you've got to have a bit of carrot and stick, and probably more carrot than stick, and that's what they probably need to work out. Moving across to Europe proper, then we had the trade balance for June from Switzerland came in at just over 3.578 billion Swiss francs versus a prior 3.433 billion francs. So the key thing here is that this figure's been picking up since Feb tip 15, and it's actually been improving on both sides. Both exports are up and imports are up. So yet the actual overall trade balance improved. So there's life in the Swiss economy yet, despite the problems with the strong franc. And
so that sort of suggests that they didn't actually need to do that peg routine.
Well, possibly not. I mean,
because it's not actually the rate of the level of the currency. It can actually just be how quickly or slowly it goes there. The market has time to adjust and
exactly. Yeah, and how does the underlying economy respond? And that probably are better off without it. Maybe they should never have had it in the first place, as you say. And then, but here in the UK, second set of borrowing numbers for the government since the election. So this is the public sector net borrowing requirement for June, came in at £8.58 billion versus a forecast of 8.6, so moderately better than the forecast, but it was up from the prior read in May of 8.352 billion. So it's pretty on balance. George Osborne can probably tick a little box and smile on the back of that, but it is a bit higher than maybe we would have liked to have seen. And the other soundbite or headline that really took my eye was from a survey conducted by Bloomberg of economists about what they think of Greece, and the takeaway from that was that 71% of the economists surveyed felt that a Brexit was still possible from now and out to 2016. So, as I said, swept under the carpet, but no issues have really been solved, and the hard work begins now.
I would suggest that 71% of economists have got it wrong, but we can argue about that at a later date, probably when they get kicked out. Right, next up.
Okay, well, a look at a couple of European movers. First of all, Swiss drug company Novartis, that's NOVN in Switzerland, trading around 99 francs 80, down 2.5% on the day, and having just extolled the virtues of the recovering Swiss economy. Unfortunately, Novartis have not been a beneficiary of this. Q2 profits dipped 32% from the same period in 2014. They're blaming a strong dollar and a poor performance from their eye care divisions. I was surprised when a company like this is a big exporter. The US medical market is the principal market in the world. They must know that they've got foreign currency exposure and risk. Why they don't do more to hedge it? Perhaps one day we'll get to the bottom of that, of the reason for that. Staying in Europe then, but moving a bit further north, Norsk Hydro, Norwegian aluminium producer, ticker is NHY there. trading around 32.62 Norwegian kroner, up about 1.56%, and bucking the trend really, because it's a metals company that's actually doing quite well by the sounds of it. Q2 net profits are up fourfold after exceptional items. If you ignore the exceptionals, then you could actually make a case to say they're up tenfold. And perhaps more important for the market going forward, the prices that they achieved on their products, finished products, grew by 2% in the second quarter of 2015. I don't think there are many metal companies that can say they're actually been able to charge more for what they're making at the moment.
Well, they're obviously very well managed, or other people are not so well managed?
Well, probably a combination of both, I'd suggest.
Okay, and on to the, what do we have, M&A? Yeah,
M&A rumours and movers. And an old favourite has come back to the table today. Qualcomm, that's QCOM in the US, around $65.77, and up about 3.1% in the pre-market. The Wall Street Journal leaks a story that they're considering their strategic options, and that could in turn include a breakup or perhaps a significant return of cash to shareholders. Activist shareholder Janner Partners got about a $2 billion stake in the business. They called for a sale of Qualcomm's chip division back in April. Just to remind people that Qualcomm is the largest producer of chips in the world for mobile phones, has a market cap of around $104 billion. Company's going to report, Handley going to report Q3 15 figures on Wednesday. I think that's after the close, I believe, and it may shed some more light on the plans then. Just to also give you as a bit of an idea of what the business does. Apart, there are two divisions, principally the chip division, as we've already said, makes chips for mobile phones and portable devices, and then that accounts for around 66% of revenues or turnover. And we've got a patent and royalties division, which basically looks after the licensing and the income from people who've used their technology in the past. That accounts for around 66% of profits. So I guess the flavour mix there is that the chip division is where they have to invest all their time and effort to make new products, whilst the patent and royalties business done its hard work and they're just collecting what they're owed. So I guess Janner Partners would like to see those two things divided, and maybe the sum of the parts will be worth more than the whole. So I think that one could go better again during the normal market. So, and as I say, obviously we won't have too long to wait perhaps to find out some further details from the management.
So definitely in play.
Yeah.
All right, and on to the data points.
Okay, again, it's a bit of a thin day for data points in the US. We've got our old friend, the Red Book chain store sales. Remember, this is a weekly number that looks at exactly that, what retail sales are like in chain stores across the US. And after a pick-up in late June and early July, the indicators resumed its downward trend. The last reading of just 0.3% was pretty disappointing. So we look to hopefully to see something in excess of that to try and provide a little boost for US retail sales, as it were, but we may not see it. And then we flagged these yesterday. Apple are reporting after the closes of Q3 figures for anyone that's in any doubt. The street forecast is for earnings per share of around $1.89 per share. That would compare to $1.40 for the same period last year. And in revenue terms, these numbers are astronomical, but we're looking for $49.3 billion of revenue. That would be a record on a quarter. That would compare to $37.4 billion that we saw in the same period last year. Interestingly, historically, the third quarter for Apple has been one of its slowest in terms of sales and revenues, but it appears that the street's expecting it to buck that trend.
Slight feeling of the market might have got a bit too overexcited about Apple in the near term.
Possibly, and I think people will be interested.
And the watch could be a bit of a Achilles heel.
It could be, and also I'm sure people maybe they won't be included in these figures, but they'll also be looking for an early read on how this new music service has been going as well. So Apple, of course, is probably the stock in the market that's got the most expectation. So it's probably got within it. So it's probably got the hardest job in not disappointing.
Okay, and finishing off with the movers and levels.
Yeah, okay. Well, we touched on eBay last week and the fact that they were going to be splitting out PayPal amongst other things. PayPal traded yesterday independently for the first time. It was trading up this morning pre-market around $41.50, $41.50 I should say, up about 2.67%, even after a good day yesterday. And the reason is simply this, that 4 brokers have taken the opportunity to publish their initial notes on the company after it's split from eBay. They're all bullish. There was one dissenting voice, but the bulls have outweighed the bears here. Most of the bulls are looking for a $45 target price, and the market seems to like what it sees. And then the other name that caught my eye today is one we've also mentioned in the past, a company called Tube Mogul. That's ticker TUBE in the US. $16.48 pre-market, up around 3.8%. And if you don't remember, these guys are sort of one of these modern e-marketing and media marketing groups. US broker flagged the upside potential in Tube Mogul because of a new service that GoPro has launched. It's a premium content licensing portal full of young people doing exciting things in dangerous sports, etc., wearing the GoPro cameras, and that's exactly the kind of thing that Tube Mogul, if I can even say that, will be able to exploit and make money out of. So there's lots of potential and excitement there, and that's why they're up 3.8%.
So a couple of good opportunities there on tap on the stocks front, and on the major markets.
Very quiet. We talked about a 9-day, winning streak for European markets yesterday, which they actually did just about achieve. But it's as you were really, sort of a day for a bit of consolidation. So FTSE, we're now looking for 67.70, plays 68.20. Really looking for a directional cues again. A similar story to some extent with the DAX. We're now looking at 11,710 on the downside, plays 11,775 to the upside. Very uncertain and what I might call faltering candles in both the S&P and the Dow last night. So we now look at 21.19 on the downside, and the S&P plays 21.34. Just raised the upper level slightly there to take account of the range yesterday. And the Dow 18,050 now, the downside level, plays 18,131 to the upside. But again, both of those really trying to decide which way they wanted to move. Euro dollar 108.10 on the downside, plays 108.70 to the upside. I think the important level really today to watch is the close. Can it close above 108.60? But I know it's tested to this 108.70 level and may even have traded briefly above it since we came on air. Aussie dollar, US dollar, 73.40 on the downside, 73.96 to the upside. The bid appears, the bid for the Aussie dollar just appears to have disappeared now. It is just looking for catalysts in either direction, I think. Dollar yen, 123.90 on the downside, plays 124.45 to the upside. I think the risk is to the upside, and perhaps we might see them get back to, I think, June 5th highs. But watch this space. And then cable, 155.30 on the downside, 155.87. All gone a little bit quiet as far as
quite narrow. Well, it wasn't that sort of volatile even before the group.
No, but it's
now it's gone into summer mode. Really.
Yeah, any upward impetus appears to be on hold for the moment there.
Okay, well that's it for the Wall Street Cost Service show today with Darren Sinden, who's the market commentator at Admiral Markets. Thanks for that, and we'll be back 1 p.m. tomorrow.